Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, hello to you. Great to have you with us. As just flagged, we did see that rebound in crude prices. We also saw rising commodity prices and metal prices supporting gains in the materials sector today, alongside a boost for both technology and also defense stocks. Just guide us through the session as from your side of the tracks, as it were.
Well, you know, investors, including myself, were expecting a slow and steady day today, and we surely did not get that. At about 5:20 a.m. Eastern Time, a Politico article came out, a fairly optimistic and probably overly ambitious article stating that Trump and lawmakers are close to a deal or making huge strides on a tax deal. I hope that's true, but the bottom line is there's a lot of poison pill provisions in that, including deducting mortgage interest, deducting state and local taxes, things that just will never get passed. So the market just looking for an excuse to rally. The stock market, S&P 500, up 1.5% today, and only 1.5% for making those highs that were made in early August. So very interesting day, but boy, it caught everybody by surprise.
Just on that note, when we were speaking with Kenny Pulkari from O'Neill Securities a little bit earlier, he was flagging he doesn't see the tax reform agenda being completed by the end of this year. Would you agree? What sort of time frame, if any, are you looking to when it comes to this idea of tax reform agenda?
Yeah, I don't think anything material will get agreed upon. Maybe we'll see like the U.S. corporate tax rate lowered to something like closer to 28%, not the 22 or 25 that they're calling for. And if the market indeed rallied today because of that article, because of those hopes, I think we're going to be in for a reversal. Because I just think there's too many deficit hawks out there, too many, as I mentioned, poison pill provisions that will keep things from getting passed. So I do think maybe the first quarter of next year will give us some hope, but not anything close to what they're advertising today.
With that in mind, I also saw some analysis overnight that was talking about a return to fundamentals for the market and a blocking out of some of this white noise. Nonetheless, you're saying it's not the fundamentals that investors are looking to at the moment, but more the fear of August.
Yeah, exactly. And today is like another example. I mean, look what happened last week. The market cratered. People were looking for a reason why. It just felt like the market was going to go to zero, and it didn't. And here we are 1.5% away from the highs made in early August, and the narrative hasn't changed. The fundamental landscape hasn't changed. It's a dearth of information, lack of liquidity, not much attendance, and that just makes it really easy for the market to just move one way or the other for no real reason at all.
But one sector certainly, Larry, that I think you'd agree is looking at the fundamentals at the moment is oil prices, and particularly this move that we have seen higher in crude prices overnight. Of course, we do have those supply questions in mind, but this currently seeming to provide support.
Yeah, I think you're right. You look at last week, I was a little bit surprised that, Brent made the move it did, even though it was in backwardation. WTI did not follow suit, but right now we're seeing a base being formed, and the demand is just, worldwide demand is just as good as advertised, and just over top of that is supply. It's a supply issue. And so now that we're getting into the middle of the refinery season, et cetera, I just do think that base will remain pretty strong. And I still think oil deserves to be closer to the mid-50s by year end.
Also wanted to get your take in terms of what you're seeing for some of the metal plays as well. We've been talking about copper quite a lot this week. In fact, of course, the only metal that remains in surplus this year. A lot of suggestions that over the longer term, copper could be a significant play here.
Yeah, exactly. And so it's one of those things where we seem to be focused just on the noise. At some point, like that noise is going to turn into fundamentals. That seems to be the way. Right now, it seems it's made sense overall just to ignore everything and just invest the way you were. But at some point, I think policy or noise will turn into policy, or it'll distract policy. So I think that's something we have to be mindful of. And I think as an investor community, we're far too laid back about the market and just thinking that it's going to continue to trudge higher.
With that in mind, I mean, I'm keen to get your take because you still remain underweight US equities against emerging markets and also European.
Yeah, I still do. That hasn't changed. I'm underweight the United States. I still think we're closer to the end than we are the beginning. And I think the growth that we're seeing is outside the United States. And it's quite good around the world in most countries that we look at. So I do believe I'm still convicted that the emerging markets make sense. I'm also invested in the Eurozone, especially in the financials, and definitely remain underweight in the United States and will continue to do so.
Larry Shover, we will leave it there. Thank you very much for the chat this morning.